Question 1. Which of the following best describes the principle of indemnity in insurance contracts? The insurer agrees to pay a preset benefit regardless of the actual financial loss. B. The insurer guarantees the insured will make a profit from any claims made. C. The insured is restored to their financial position prior to the loss without profiting. D. The insured can recover from multiple insurers for the same claim to maximize compensation. Correct answer. C. The insured is restored to their financial position prior to the loss without profiting. Explanation. The principle of indemnity in insurance ensures that the insured is compensated only to the extent of the actual loss suffered. This prevents the insured from profiting from the claim, maintaining fairness, and preventing moral hazard. Options A and B incorrectly imply that benefits or profits are guaranteed, which contradicts the principle of indemnity. Option D suggests double recovery, which is not permitted as it leads to unjust enrichment. Question 2. Scenario: Emily, an insurance underwriter at a North Carolina-based insurer, is assessing an application for a homeowner's policy. The applicant, Mr. Thompson, discloses that his property has a history of water damage due to past flooding. However, the property is not located in a designated high-risk flood zone. Which underwriting action should Emily take to balance risk management and regulatory compliance? A. Deny the application immediately, citing past flood damage as a risk factor. B. Issue the policy with a higher deductible and exclude flood coverage. C. Approve the application without modifications to avoid discrimination. D. Suggest Mr. Thompson apply for flood insurance through the National Flood Insurance Program, NFIP. Correct answer. D. Suggest Mr. Thompson apply for flood insurance through the National Flood Insurance Program, NFIP. Explanation. Underwriters must evaluate the risk profile while adhering to regulatory guidelines. Given Mr. Thompson's history of water damage, advising him to obtain separate flood coverage through the NFIP is the best practice. Option B partially addresses risk management but fails to adhere to flood insurance regulations. Option A is overly restrictive, and Option C neglects proper risk management practices. NFIP ensures coverage for properties vulnerable to floods, even if not in high-risk areas. Question 3. Which of the following best describes a unilateral contract in insurance? Both the insurer and the insured are bound to perform specific obligations. B. Only the insurer has an obligation to act once the premium is paid. C. The insurer can unilaterally change the terms of the policy at any time. D. The insurer and insured must mutually agree to all claim settlements. Correct answer. B. Only the insurer has an obligation to act once the premium is paid. Explanation. A unilateral contract in insurance means that only one party, the insurer, is legally bound to fulfill their obligations, which is to pay valid claims once the insured meets all policy terms, e.g., paying the premium. Option A describes a bilateral contract where both parties are bound to act. Option C is incorrect because the insured cannot change policy terms unilaterally. Option D misinterprets the claims process, where the insurer decides claims per policy terms. Relevant law guideline. This concept is rooted in contract law principles where insurance policies are recognized as unilateral contracts due to the one-sided nature of enforceable promises. Question 4. Which of the following accurately explains the concept of coinsurance in property insurance? The insured agrees to bear a portion of the loss if they do not insure the property to the required value. B. The insurer shares the cost of any claim equally with the insured. C. The insured is only responsible for losses that exceed the deductible. D. The insured receives the full replacement cost regardless of the coverage amount. Correct answer. A. The insured agrees to bear a portion of the loss if they do not insure the property to the required value. Explanation. Coinsurance requires the insured to carry a certain percentage of the property's value, e.g., 80% or 90%, to receive full compensation for partial losses. If the insured fails to meet this requirement, they share a proportionate part of the loss. Options B, C, and D misinterpret the mechanics of coinsurance. Relevant law guideline. The coinsurance clause is found in many property insurance contracts to encourage policyholders to insure their property adequately, thus ensuring premium adequacy across the policyholder pool. Question 5. Scenario. Jason owns a small bakery in North Carolina and has a business owner's policy, BOP, in place. A severe storm damages his property, forcing him to close for repairs. Due to the closure, Jason loses income and incurs additional expenses to maintain certain operations. What type of coverage within the BOP would most likely help Jason recover his lost income and cover extra expenses? A. Property damage coverage. B. Business income coverage. C. Liability coverage. D. Commercial general liability CGL. Correct answer. B. Business income coverage. Explanation. Business income coverage, also known as business interruption insurance, under a BOP compensates the insured for a loss of income and extra expenses incurred due to covered property loss that temporarily suspends operations. Option A. Covers direct physical damage to property but not lost income. Option C. Covers legal liability. And D. Applies to third-party claims, neither of which are applicable to Jason's scenario. Relevant law guideline. Business income insurance is designed to support businesses in managing operational risks and financial continuity following insured perils. Question 6. Which of the following best illustrates the legal concept of insurable interest in an insurance contract? A. A person purchases life insurance on a celebrity they admire without their knowledge. B. An individual insures their neighbor's property to help them financially. C. A company takes out insurance on equipment it owns and relies on for business operations. D. A tenant takes out homeowners insurance on their landlord's building. Correct answer. C. A company takes out insurance on equipment it owns and relies on for business operations. Explanation. Insurable interest requires the insured to have a financial stake in the property or person being insured. Without this interest, the contract is invalid. Option C correctly describes an insurable interest where the company stands to suffer financial loss if the equipment is damaged. Options A, B, and D lack valid insurable interest. Relevant law guideline. Insurable interest is essential in insurance contracts to prevent moral hazard and ensure that only parties who would face a financial loss can seek coverage. Question 7. In a homeowner's policy, HA3, which of the following is an exclusion typically found under coverage was dwelling? A. Damage caused by fire. B. Theft of personal property. C. Earthquake damage. D. Windstorm damage. Correct answer. C. Earthquake damage. Explanation. Standard HA3 policies exclude coverage for earthquakes unless an endorsement is purchased. Fire and windstorm damage, options A and D, are covered perils, and theft, option B, is typically covered under coverage C, personal property. Relevant law guideline. Policyholders should be aware of the exclusions listed in their policy to determine if additional endorsements or separate policies are needed. Question 8. Which of the following statements best describes the difference between the actual cash value, EVE, and replacement cost and loss settlement methods? A. ACV compensates the insured for the cost of a new item without considering depreciation, while replacement cost deducts depreciation. B. ACV deducts depreciation from the item's value, while replacement cost pays for a new item at current market value without depreciation. C. Both ACV and replacement cost account for depreciation in their payout calculations. D. Replacement cost compensates the insured based on the original purchase price of the item. Correct answer. B. ACV deducts depreciation from the item's value, while replacement cost pays for a new item at current market value without depreciation. Explanation. Actual cash value, ACV, considers the depreciation of the item when determining its value at the time of loss, while replacement cost reimburses the insured for the cost of purchasing a new item at today's prices without deducting for depreciation. Options A, C, and D, providing correct interpretations of these terms. Relevant law guideline. ACV and replacement cost are commonly used in property insurance to define how a loss will be settled and affect policy premiums and payouts. Question 9. Which of the following is true about the claims made form in a commercial general liability (CGL) policy? A. Coverage is provided for incidents that occur and are reported during the policy period. B. Coverage is only valid for incidents occurring during the policy period, regardless of when reported. C. Coverage is triggered only if the policyholder can prove negligence within the reporting period. D. Coverage remains indefinite as long as the incident occurred within the policy period. Correct answer. A. Coverage is provided for incidents that occur and are reported during the policy period. Explanation. The claims-made form provides coverage only if the incident is both reported and occurred during the policy period or any applicable extended reporting period. Option B describes an occurrence policy. Option C misstates the standard of proof. And D inaccurately extends coverage indefinitely. Relevant law guideline. Claims-made policies are commonly used for liability coverage where potential claims may be reported long after the incident. The reporting requirement ensures that insurers can accurately assess risks and set reserves. Question 10. Under North Carolina regulations, which of the following is considered an unfair trade practice in the business of insurance? A. Offering a client a multi-policy discount. B. Providing detailed policy explanations upon client request. C. Failing to acknowledge and act promptly upon communications regarding claims. D. Adjusting policy terms to meet specific client needs. Correct answer. C. Failing to acknowledge and act promptly upon communications regarding claims. Explanation. Delays or failure to respond promptly to claim-related communications is classified as an unfair claims practice and violates North Carolina's insurance regulations. Options A, B, and D are part of regular and compliant insurance practices. Relevant law guideline. North Carolina general statutes on insurance practices emphasize fair treatment of policyholders and strict adherence to timelines in handling claims to prevent unfair treatment. Question 11. In North Carolina, which type of policy provision allows an insurer to refuse to renew a personal automobile policy due to the insured's driving record? A. Cancellation clause. B. Non-renewal provision. C. Endorsement provision. D. Exclusion clause. Correct answer. B. Non-renewal provision. Explanation. A non-renewal provision allows insurers to refuse to renew a policy, typically due to factors such as the insured's driving record or claims history. The cancellation clause A. is used for terminating a policy before the end of the term. Endorsements C. modify the policy's terms, and exclusion clauses D. specify what is not covered. Relevant law guideline. Under North Carolina insurance regulations, insurers must follow state guidelines when deciding not to renew a policy, including notifying the insured within the stipulated time frame. Question 12. What type of bond guarantees that a contractor will complete a project according to the terms and conditions of the contract? A. Performance bond. B. Bid bond. C. Payment bond. D. License bond. Correct answer. A performance bond. Explanation. A performance bond guarantees the completion of a project in accordance with the contract's terms and conditions. A bid bond, B, ensures that a contractor submits a serious bid and can obtain performance and payment bonds. A payment bond, C, guarantees payment to subcontractors and suppliers. A license bond, D, ensures compliance with local regulations. Relevant law guideline. Performance bonds are common in construction projects to protect the project owner from financial loss if the contractor fails to meet contractual obligations. Question 13. Under North Carolina's workers' compensation laws, which of the following benefits are typically an OT included? A. Medical expenses related to workplace injuries. B. Compensation for pain and suffering. C. Lost wages due to temporary or permanent disability. D. Rehabilitation and retraining expenses. Correct answer. B. Compensation for pain and suffering. Explanation. Workers' compensation in North Carolina covers medical expenses, lost wages, and rehabilitation but does not provide compensation for pain and suffering. This limitation differentiates workers' compensation from general personal injury claims. Relevant law guideline. North Carolina's Workers' Compensation Act mandates coverage for injuries or illnesses related to work, focusing on economic damages rather than non-economic damages like pain and suffering. Question 14. Which of the following is true about an open peril policy? A. It only covers specific perils listed in the policy. B. It covers all risks except those explicitly excluded. C. It covers named perils and requires proof of damage by an insured peril. D. It provides liability coverage for third-party claims. Correct answer. B. It covers all risks except those explicitly excluded. Explanation. An open peril policy provides broad coverage, by protecting against all types of risks except those specifically excluded in the policy. This is in contrast to a named peril policy, option A, which only covers specific perils listed in the contract. Relevant law guideline. Open peril policies are common in homeowners insurance to provide more comprehensive coverage, though policyholders should review exclusions closely. Question 15. Which endorsement to a homeowner's policy would cover damage due to sewer backup or water backup from drains? A. Flood insurance endorsement. B. Water backup and some pump overflow endorsement. C. Earthquake endorsement. D. Personal property replacement cost endorsement. Correct answer. B. Water backup and some pump overflow endorsement. Explanation. The water backup and some pump overflow endorsement adds coverage for damage due to water backing up through sewers or drains or due to a failed sump pump. Standard homeowners policies typically exclude this type of damage unless the endorsement is added. Option A covers flooding, C covers earthquakes, and D pertains to personal property replacement value. Relevant law guideline. This endorsement is crucial for homeowners who want protection from water damage that originates from below-ground sources. Question 16. Which of the following is an example of a vicarious liability? A. An employer is held responsible for the negligent actions of an employee. B. A homeowner is liable for damage caused by their own negligence. C. A driver is liable for an accident they directly caused. D. An insured seeks coverage for a damaged vehicle after a collision. Correct answer. A. An employer is held responsible for the negligent actions of an employee. Explanation. Vicarious liability occurs when one party, such as an employer, is held legally responsible for the actions of another, such as an employee, conducted within the scope of their employment. The other options describe direct liability rather than vicarious liability. Relevant law guideline. This concept is based on the legal doctrine of respondit superior, which holds that employers can be held liable for the actions of employees performed in the course of their duties. Question 17. In North Carolina, if an insured fails to make premium payments on a policy, what is the typical procedure an insurer must follow before canceling the policy? A. Immediate cancellation with no notice. B. A written notice of cancellation must be given at least 10 days in advance. C. The policy is canceled after a 30-day grace period. D. The insurer must notify the state insurance department before canceling. Correct answer. B. A written notice of cancellation must be given at least 10 days in advance. Explanation. In North Carolina, insurers must provide written notice to the policyholder at least 10 days before canceling a policy due to non-payment of premiums. This gives the insured an opportunity to pay the outstanding amount. Options A, C, and D are not standard procedures for non-payment cancellation. Relevant law guideline. This notice requirement is part of consumer protection regulations, ensuring policyholders have sufficient warning before losing coverage. Question 18. Which of the following best describes moral hazard in the context of insurance? A. A factory owner installs fire sprinklers to minimize risk. B. An insured exaggerates the value of a claim to receive more compensation. C. A building has an inadequate electrical system that poses a fire risk. D. An insured denies a claim due to insufficient coverage. Correct answer. B. An insured exaggerates the value of a claim to receive more compensation. Explanation. Moral hazard refers to the risk that an individual will behave recklessly or fraudulently because they are protected by insurance. Option B demonstrates this, while option A is an example of risk management. Option C is a physical hazard, and option D relates to claim denial. Relevant law guideline. Moral hazard is a significant concern for insurers as it can lead to increased claims and costs, impacting the stability of the insurance pool. Question 19. Which of the following perils would be covered under a typical North Carolina HA2 broad form homeowners policy? A. Flood. B. Earthquake. C. Theft. D. War. Correct answer. C. Theft. Explanation. A HA2 broad form homeowners policy covers named perils, including theft, fire, windstorm, and certain other damages. Flood A and earthquake B require separate endorsements or policies, while war D is excluded from standard coverage. Relevant law guideline. Understanding covered perils is essential for policyholders to avoid coverage gaps and ensure appropriate endorsements are added when needed. Question 20. What is the primary purpose of the North Carolina Insurance Guarantee Association? A. To sell insurance policies at reduced rates. B. To manage claims disputes between policyholders and insurers. C. To provide coverage for claims when an insurance company becomes insolvent. D. To monitor and set premium rates in the state. Correct answer. C. To provide coverage for claims when an insurance company becomes insolvent. Explanation. In North Carolina, Insurance Guarantee Association is responsible for protecting policyholders by covering certain claims if an insurer becomes insolvent. This ensures financial security for policyholders in case of company failure. Options A, B, and D describe different functions not related to this association. Relevant law guideline. State guarantee associations play an important role in maintaining trust in the insurance industry by ensuring claim payment even if an insurer fails. Question 21. What type of insurance policy covers a business for bodily injury and property damage claims that occur on its premises or as a result of its operations? A. Commercial property insurance. B. Business income insurance. C. Commercial general liability insurance. D. Professional liability insurance. Correct answer. C. Commercial general liability insurance. Explanation. Commercial general liability (CGL) insurance provides coverage for bodily injury and property damage claims arising from a business's premises, operations, or products. Commercial property insurance A. Covers the physical assets of the business. Business income insurance B. Covers lost income due to covered loss. Professional liability insurance D. Protects against errors and omissions in providing professional services. Question 22. Which of the following is an example of pure risk in the context of property insurance? A. The potential to win a lottery. B. The risk of an investment losing value. C. The possibility of a house fire. D. The chance of a stock price increase. Correct answer. C. The possibility of a house fire. Explanation. Pure risk involves situations that only have the possibility of loss or no change. There is no potential for gain. A house fire, C, is a classic example of pure risk. Options A and D are speculative risks, which involve the possibility of gain or loss. Option B relates to financial risk in investments. Question 23. In which of the following scenarios would an unendorsed commercial property policy provide coverage? A. Flood damage. B. Fire damage. C. Earthquake damage. D. Sewer backup damage. Correct answer. B. Fire damage. Explanation. A standard commercial property policy typically covers perils such as fire, lightning, and some other named perils but excludes coverage for floods, the earthquakes, C, and sewer backups, D, unless endorsements are added. Question 24. What is the primary function of an umbrella liability policy? A. To cover specific property losses not covered by a standard policy. B. To provide coverage only for the policyholder's business vehicles. C. To extend additional liability coverage beyond the limits of underlying policies. D. To replace a homeowner's policy for high-value properties. Correct answer. C. To extend additional liability coverage beyond the limits of underlying policies. Explanation. An umbrella liability policy provides extra coverage above the limits of the insured's primary policies, e.g., homeowners or auto insurance. It can also cover certain claims excluded from underlying policies, offering broader protection. Question 25. What is the term for a policy that protects a company when a third party sues due to harm caused by defective products? A. Completed operations coverage. B. Product liability insurance. C. Premises liability coverage. D. Inland marine insurance. Correct answer. B. Product liability insurance. Explanation. Product liability insurance covers businesses against claims related to injuries or damages caused by products they manufactured, sold, or distributed. Completed operations, A, is for post-project liabilities. Premises liability, C, covers accidents on business property. and inland marine. D. Covers property in transit. Question 26. Which of the following would be covered under a personal auto policy, PAP, comprehensive coverage? A. Collision with another vehicle. B. Theft of the insured vehicle. C. Injuries to the policyholder in an accident. D. Damage to another person's vehicle. Correct answer. B. Theft of the insured vehicle. Explanation. Comprehensive coverage under a personal auto policy covers non-collision related incidents such as theft, vandalism, or natural disasters. Collision A covers accidents with vehicles or objects, while options C and D refer to other coverage types within auto insurance. Question 27. What does a declarations page in an insurance policy typically contain? A. Detailed exclusions and conditions of the policy. B. Information on how to file a claim. C. Basic policy details such as the insured's name, coverage limits, and premium. D. Descriptions of covered perils. Correct answer. C. Basic policy details such as the insured's name, coverage limits, and premium. Explanation. The declarations page outlines the essential information of the policy, including the insured's name, policy period, coverage types and limits, and premium amount. Options A, B, and D describe other sections of an insurance policy. Question 28. Which of the following endorsements would provide coverage for valuable items such as jewelry or fine art under a homeowner's insurance policy? A. Inflation guard endorsement. B. Scheduled personal property endorsement. C. Replacement cost endorsement. D. Earthquake endorsement. Correct answer. B. Scheduled personal property endorsement. Explanation. A scheduled personal property endorsement provides coverage for high-value items that may exceed the standard coverage limits under a homeowner's policy. Options A, C, and D relate to other types of coverage enhancements. Question 29. What type of law is primarily associated with compensation for damages when a policyholder's actions inadvertently result in harm to others? A. Contract law. B. Tort law. C. Constitutional law. D. Administrative law. Correct answer. B. Tort law. Explanation. Tort law involves claims for compensation when someone's negligence or wrongful actions cause harm to another person or property. Insurance policies often cover liabilities arising from torts, such as personal injury or property damage. Question 30. In a property insurance policy, what does the term coinsurance refer to? A. The splitting of premium payments between the insurer and insured. B. The insured's agreement to cover a percentage of covered losses. C. A joint policy between two insurers for shared coverage. D. A mandatory deductible on all property damage claims. Correct answer. B. The insured's agreement to cover a percentage of covered losses. L. Explanation. Coinsurance is a provision where the insured agrees to maintain coverage at a specified percentage of the property's value, typically 80%, 90%, or 100%. Failure to do so results in reduced claims payment by the insurer in the event of partial loss. Question 31. Which insurance principle states that an insured should not profit from an insurance claim but should be restored to their original financial position? A. Subrogation. B. Indemnity. C. Utmost good faith. D. Contribution. Correct answer. B. Indemnity. Explanation. The principle of indemnity ensures that an insured is compensated for their loss but does not profit from the insurance claim. It aims to restore the insured to their financial state before the loss. Subrogation A. Allows insurers to take legal action on behalf of the insured. Utmost good faith. C. Refers to honesty in disclosing relevant information. And contribution. D. Involves multiple policies sharing the loss. Question 32. Which of the following insurance policies would provide coverage for a company if its executive officers are sued for their decisions and actions while managing the company? A. General liability insurance. B. Errors and omissions. EO insurance. C. Directors and officers. DO insurance. D. Employment practices liability insurance. Correct answer. C. Directors and officers. D. Insurance. Explanation. Directors and officers insurance protects the company and its executives from claims resulting from decisions and actions taken while performing their duties. General liability insurance A. Covers bodily injury and property damage, errors, and omissions. B. Applies to professional negligence and employment practices liability. D. Covers employment-related issues. Question 33. What type of policy is designed to cover high-risk items such as expensive jewelry or fine art, which may not be fully covered under standard homeowners policies? A. Umbrella policy. B. Scheduled personal property endorsement. C. HA2 policy. D. Personal liability policy. Correct answer. B. Scheduled personal property endorsement. Explanation. A scheduled personal property endorsement allows for specific high-value items to be listed and covered at their appraised value under a homeowner's policy. An umbrella policy A provides additional liability coverage. Now, HA2 policy C is a basic form of homeowners insurance, and a personal liability policy D covers liability claims but not high-value items. Question 34. Which of the following is generally not covered by a comprehensive auto insurance policy? A. Theft of the vehicle. B. Hail damage. C. Collision with another vehicle. D. Vandalism. Correct answer. C. Collision with another vehicle. Explanation. Comprehensive auto insurance covers non-collision incidents such as theft, hail damage, and vandalism. Collision coverage, which is separate, applies to accidents involving other vehicles or objects. Comprehensive A, B, D does not include collision-related damage. Question 35. What is the primary purpose of reinsurance? A. To reduce an insurer's exposure to loss. B. To provide direct coverage to policyholders. C. To eliminate the need for underwriting. D. To offer insurance to high-risk individuals. Correct answer. A. To reduce an insurer's exposure to loss. Explanation. Reinsurance is the practice where insurers transfer a portion of their risk to other insurance companies to limit the total loss they could face. It does not involve direct policyholder coverage. B. Underwriting elimination. C. Or exclusively covering high-risk individuals. D. Question 36. Which clause in an insurance policy outlines the circumstances in which the insurer can deny a claim? A. Exclusions. B. Declarations. C. Conditions. D. Endorsements. Correct answer. A. Exclusions. Explanation. The exclusions section specifies the situations and conditions under which a claim may be denied. The declarations. B. Outline basic policy information. Conditions. C. List the policyholder's responsibilities. And endorsements. D. Modify the policy's coverage. Question 37. Which of the following types of insurance is mandatory for employers to provide in most states to cover work-related injuries? A. Health insurance. B. Workers' compensation insurance. C. General liability insurance. D. Disability insurance. Correct answer. B. Workers' compensation insurance. Explanation. Workers' compensation insurance is required by law in most states and provides benefits for work-related injuries or illnesses. Health insurance A. Covers general medical expenses. General liability C. Addresses third-party injuries. And disability insurance D. Supports income replacement for non-work-related disabilities. Question 38. What is the main benefit of purchasing an umbrella insurance policy? A. It increases the deductible on existing policies. B. It provides a discount on other insurance premiums. C. It offers additional liability coverage beyond the limits of standard policies. D. It extends coverage for damages excluded from all other policies. Correct answer. C. It offers additional liability coverage beyond the limits of standard policies. Explanation. An umbrella insurance policy provides extra liability protection that exceeds the coverage limits of the policyholder's standard auto or homeowner's insurance. It does not increase deductibles. A. Provide discounts. B. Or cover all excluded damages. D. Question 39. which term describes the portion of a claim that the insured must pay out of pocket before the insurance company covers the remaining amount? A. Premium. B. Deductible. C. Copayment. D. Exclusion. Correct answer. B. Deductible. Explanation. A deductible is the amount the policyholder is responsible for paying before the insurer covers any claim expenses. A premium, A, is the regular payment for the policy. A copayment, C, is typically found in health insurance for services and exclusions. D, are situations not covered by the policy. Question 40. What type of insurance policy is typically purchased to protect against claims that exceed the coverage provided by underlying liability policies? A. Homeowners insurance. B. Umbrella insurance. C. Term life insurance. D. Comprehensive auto insurance. Correct answer. B. Umbrella insurance. Explanation. Umbrella insurance provides additional liability coverage that supplements existing policies such as auto or homeowners insurance when the policy limits are reached. It does not provide primary coverage like homeowners, A, life, C, or comprehensive auto insurance, D. Question 41. What is the main purpose of the coinsurance clause in a property insurance policy? A, to reduce the deductible. B, to ensure that the insured shares in the risk of loss. C, to provide additional liability coverage. D, to eliminate the need for an appraisal. Correct answer. B, to ensure that the insured shares in the risk of loss. Explanation. The coinsurance clause requires the policyholder to carry a certain percentage of the property value as coverage. If the insured does not meet this requirement, they must share a portion of the loss with the insurer. This encourages policyholders to purchase sufficient insurance coverage. Question 42. Which type of life insurance policy provides a death benefit and cash value accumulation that can grow based on the performance of a portfolio of investments? A. Term life insurance. B. Universal life insurance. C. Variable life insurance. D. Whole life insurance. Correct answer. C. Variable life insurance. Explanation. Variable life insurance offers both a death benefit and an investment component, where the cash value can increase based on the performance of the chosen investments. Term life, A, provides coverage without cash value. Universal life, B, has flexible premiums and cash value. And whole life, D, offers guaranteed cash value growth. Question 43. Which type of auto insurance coverage is mandatory in most states and covers injuries to other people and damage to their property when you are at fault in an accident? A. Collision coverage. B. Comprehensive coverage. C. Liability coverage. D. Uninsured motorist coverage. Correct answer. C. Liability coverage. Explanation. Liability coverage is required in most states and pays for bodily injury and property damage to others if the policyholder is at fault in an accident. Collision, A, and comprehensive, B, cover damages to the policyholder's vehicle, while uninsured motorist, D, covers accidents involving uninsured drivers. Question 44. In a health insurance policy, what is the term for the fixed amount the insured pays for each medical service or prescription? A. Premium. B. Deductible. C. Copayment. D. Coinsurance. Correct answer. C. Copayment. Explanation. A copayment is a set amount the insured pays for a specific service or prescription, with the remainder covered by insurance. A premium, A, is the payment for the policy. A deductible, B, is the amount paid before insurance starts covering costs, and coinsurance, D, is the percentage split of costs after the deductible is met. Question 45. Which of the following policies provides coverage for a property owner against loss of rental income if the property becomes uninhabitable due to a covered peril? A. Liability insurance. B. Renter's insurance. C. Loss of use coverage. D. Business interruption insurance. Correct answer. C. Loss of use coverage. Explanation. Loss of use coverage compensates for lost rental income if the insured property is uninhabitable due to covered peril. Liability insurance, A, covers legal claims. Renter's insurance, B, protects tenants and business interruption insurance. D is for business-related income loss. Question 46. What type of insurance coverage protects a professional from claims of negligence or inadequate work? A. General liability insurance. B. Workers' compensation insurance. C. Professional liability insurance. D. Business owner's policy. Correct answer. C. Professional liability insurance. Explanation. Professional liability insurance, also known as errors and omissions insurance, covers professionals against claims of negligence or inadequate work. General liability insurance, A, covers third-party bodily injury and property damage. Workers' compensation, B, covers employee injuries. A business owner's policy, D, is a comprehensive policy for small businesses. Question 47. Which of the following statements about a deductible in an insurance policy is correct? A. It is the amount the insurer pays before the insured contributes. B. It is the maximum amount the insured will pay in a policy period. C. It is the portion of a covered loss paid by the insured before insurance coverage begins. D. It is a premium rebate offered at the end of the policy term. Correct answer. C. It is the portion of a covered loss paid by the insured before insurance coverage begins. Explanation. A deductible is the amount an insured must pay out of pocket before the insurer covers any costs for a claim. It does not involve the insurer paying first A. A maximum cap on insured payments, B. Or a rebate, D. Question 48. What type of homeowner's insurance coverage is specifically for additional living expenses if a home is uninhabitable due to covered peril? A. Dwelling coverage. B. Personal property coverage. C. Additional living expenses, AL coverage. D. Liability coverage. Correct answer. C. Additional living expenses, AL coverage. Explanation. ALE coverage pays for the additional costs of living elsewhere while the home is being repaired after damage from a covered peril. Dwelling coverage, A, repairs or rebuilds the home. Personal property coverage, B, covers belongings. And liability coverage, D, protects against legal claims. Question 49. What is the primary benefit of having a HA5 homeowner's insurance policy compared to a HA3 policy? A, it provides coverage only for named perils. B, it offers comprehensive open peril coverage for both the dwelling and personal property. C, it has a lower premium cost. D, it includes earthquake insurance as standard. Correct answer. B, it offers comprehensive open peril coverage for both the dwelling and personal property. Explanation. A HA5 policy covers all perils except those specifically excluded for both the dwelling and personal property. And HA3 policy provides open peril coverage for the dwelling but named peril coverage for personal property. HA5 does not inherently include earthquake insurance, D, or come with lower premiums, C. Question 50. Which of the following is not typically covered under a standard homeowner's insurance policy? A. Damage from fire. B. Theft of personal belongings. C. Flood damage. D. Vandalism. Correct answer. C. Flood damage. Explanation. Flood damage is generally excluded from standard homeowners insurance policies and requires separate flood insurance. Fire damage, A, theft, B, and vandalism, D, are typically covered by most standard policies. Question 51. What does an umbrella insurance policy primarily provide? A. Coverage for personal belongings up to their replacement value. B. Additional liability coverage beyond the limits of other policies. C. Comprehensive health coverage for family members. D. Protection against uninsured motorist claims. Correct answer. B. Additional liability coverage beyond the limits of other policies. Explanation. An umbrella insurance policy provides extra liability coverage beyond the limits of the insured's existing policies, such as auto or homeowners insurance. Does not cover personal belongings. A. Comprehensive health coverage, C, or uninsured motorist claims, D. Question 52. Which of the following best describes a peril in the context of insurance? A. A condition that increases the chance of a loss. B. The actual cause of a loss. C. A cause that excludes certain types of coverage. D. The maximum coverage limit of a policy. Correct answer. B. The actual cause of a loss. Explanation. A peril is the specific risk or event that causes a loss such as fire, theft, or a storm. A condition increasing the chance of loss, A, is a hazard, while exclusions, C, and policy limits, D, relate to policy terms. Question 53. In auto insurance, what does PIP, personal injury protection, coverage typically include? A, damage to your vehicle from a collision. B, legal defense costs in case of a lawsuit. C, medical expenses for injuries regardless of fault. D, liability for damages you cause to other vehicles. Correct answer. C, medical expenses for injuries regardless of fault. Explanation. PIP coverage helps pay for medical expenses and sometimes lost wages for the policyholder and passengers, regardless of who is at fault in an accident. Does not cover vehicle damage, A, legal defense, B, or third-party liability, D. Question 54. What is the term for the initial amount an insured person must pay before their insurance starts covering expenses? A, copayment. B, premium. C, deductible. D, coinsurance. Correct answer. C, deductible. Explanation. A deductible is the amount paid out of the pocket by the insured before the insurance company starts to cover costs. Copayment, A, is a fixed amount for a service. A premium, B, is the payment for the policy. And coinsurance, D, is a cost-sharing arrangement after the deductible. Question 55. What is the main function of an insurance premium? A, it acts as a deductible in a policy. B, it represents the total amount of coverage available. C, it is the periodic payment made by the policyholder to maintain insurance coverage. D, it is the maximum benefit an insurer will pay for a claim. Correct answer. C, it is the periodic payment made by the policyholder to maintain insurance coverage. Explanation. An insurance premium is the payment made by the policyholder to keep their insurance policy active. It is not the deductible, A, the total coverage amount, B, or the maximum payout, D. Question 56. Which type of life insurance provides coverage for a specific term and does not accumulate cash value? A, whole life insurance. B, universal life insurance. C, term life insurance. D, variable life insurance. Correct answer. C, term life insurance. Explanation. Term life insurance provides coverage for a specific period and it does not accumulate cash value. Whole life, A, universal life, B, and variable life, D, policies include a cash value component. Question 57. What type of insurance policy would typically cover the costs associated with a data breach? A, commercial property insurance. B, general liability insurance. C, cyber liability insurance. D, business interruption insurance. Correct answer. C, cyber liability insurance. Explanation. Cyber liability insurance helps cover the costs associated with data breaches, including legal fees, notification expenses, and credit monitoring. Commercial property insurance, A, covers physical assets. General liability, B, covers bodily injury and property damage. And business interruption insurance, D, covers lost revenue due to operational disruptions. Question 58. Which clause in an insurance policy specifies the conditions under which the policyholder can cancel the policy? A, exclusions clause. B, cancellation clause. C, indemnity clause. D, coinsurance clause. Correct answer. B, cancellation clause. Explanation. A cancellation clause outlines the terms and conditions under which the policyholder or the insurer can terminate the policy. Exclusions. A, lists what is not covered. The indemnity clause. C, relates to compensation. And the coinsurance clause. D, requires the insured to bear a portion of the risk. Question 59. What is the primary purpose of liability coverage in an auto insurance policy? A, to cover the insured's medical expenses. B, to cover damages to the insured's vehicle. C. To protect the insured against legal claims from third parties. D. To replace the insured's vehicle if stolen. Correct answer. C. To protect the insured against legal claims from third parties. Explanation. Liability coverage pays for damages or injuries to others when the insured is at fault in an accident. It does not cover the insured's medical expenses, A. Their vehicle damage, B. Or theft of the vehicle, D. Question 60. Which type of homeowner's insurance policy provides the broadest coverage, including open peril coverage for both the dwelling and personal property? A. HA1, B. HA3, C. HA5, D. HA. Correct answer. C. HA5. Explanation. A HA5 policy provides the broadest coverage, with open peril protection for both the dwelling and personal property. HA1A is basic coverage. HA3B is a more standard policy with open peril coverage for the dwelling and named peril for personal property. And HA8D is for older homes with limited coverage. Question 61. In North Carolina, which type of policy provision would prohibit an insured from transferring their rights under the policy to another party without the insurer's consent? A. Assignment clause, B. Coinsurance clause, C. Appraisal clause, D. Subrogation clause. Correct answer. A. Assignment clause. Explanation. An assignment clause in a policy restricts the transfer of the insured's rights or interest under the policy to another party without the insurer's approval. This protects the insurer from unintended risks. The other clauses, B, C, D, serve different functions related to claim payment and loss valuation. Question 62. What is the purpose of the North Carolina Joint Underwriting Association, NCDU? A. To provide auto insurance for high-risk drivers. B. To offer property insurance to those unable to find it in the standard market. C. To regulate insurance rates within the state. D. To provide reinsurance to smaller insurers. Correct answer. B. To offer property insurance to those unable to find it in the standard market. Explanation. The North Carolina Joint Underwriting Association, NCDU, provides property insurance to individuals who are unable to secure it through traditional channels. This helps ensure that coverage is available to high-risk applicants who might otherwise be denied insurance. Question 63. Under North Carolina regulations, when must an insurer provide a policyholder with an explanation of their rights to request a review or appeal after a claim is denied? A. Within 10 days of the denial. B. At the time of the policy issuance. C. Immediately following the claim denial. D. Only upon request from the policyholder. Correct answer. C. Immediately following the claim denial. Explanation. In North Carolina, insurers must notify policyholders of their rights to request a review or appeal when a claim is denied. This notification must be provided promptly after the claim decision to ensure the policyholder is aware of their options for recourse. Question 64. Which of the following actions is required by North Carolina law when an insurance company plans to increase homeowners' insurance premiums? A 45-day advance written notice to policyholders. B. A state approval process before notifying policyholders. C. No specific action required. D. Immediate implementation without prior notice. Correct answer. A 45-day advance written notice to policyholders. Explanation. North Carolina law requires insurers to provide a 45-day advance written notice to policyholders before implementing an increase in homeowners' insurance premiums. This allows policyholders sufficient time to review the change or seek alternative coverage if necessary. Question 65. What is the maximum percentage deductible that can be applied for wind and hail coverage under a standard North Carolina homeowners insurance policy? A. 1%. B. 2%. C. 5%. D. 10%. Correct answer. C. 5%. Explanation. The maximum deductible for wind and hail coverage under standard North Carolina homeowners policies can go up to 5% depending on the policy terms. This deductible helps manage premium costs and is agreed upon at policy issuance. Question 66. In North Carolina, which of the following is true regarding the cancellation of an auto insurance policy due to a driver's license suspension? A. The policy can be canceled without prior notice. B. The policy requires a 15-day notice before cancellation. C. The policy can only be canceled at the policy's renewal date. D. The policy cannot be canceled due to license suspension. Correct answer. B. The policy requires a 15-day notice before cancellation. Explanation. North Carolina law requires a 15-day advance notice before canceling an auto insurance policy due to a driver's license suspension. This ensures that the policyholder is informed and has the opportunity to address the issue. Question 67. What is the purpose of the North Carolina Insurance Guarantee Association? A. To insure large-scale commercial properties. B. To provide financial assistance to policyholders when an insurance company becomes insolvent. C. To offer reinsurance services to insurers. D. To audit insurance companies for compliance. Correct answer. B. To provide financial assistance to policyholders when an insurance company becomes insolvent. Explanation. The North Carolina Insurance Guarantee Association protects policyholders by covering claims if their insurer becomes insolvent. This association ensures that policyholders are not left without coverage in the event of an insurer's financial failure. Question 68. How many days does an insurer in North Carolina have to acknowledge a filed claim after receiving notice? A. 3 days. B. 5 days. C. 10 days. D. 15 days. Correct answer. C. 10 days. Explanation. North Carolina insurance regulations require insurers to acknowledge a filed claim within 10 days of receiving notice. This prompt response helps ensure that the claims process begins in a timely manner and provides policyholders with updates on the status of their claim. Question 69. What is one requirement for an insurance agent to sell surplus lines insurance in North Carolina? A. The agent must hold a life insurance license. B. The agent must be a member of the North Carolina Department of Insurance. C. The agent must have a surplus lines insurance license. D. The agent must complete a background check every year. Correct answer. C. The agent must have a surplus lines insurance license. Explanation. To sell surplus lines insurance in North Carolina, an agent must hold a specific surplus lines license. This ensures the agent is properly trained and authorized to handle non-admitted insurance products that provide coverage not available through standard insurers. Question 70. In North Carolina, if a homeowner's insurance policy is to be non-renewed for reasons other than non-payment, how many days' notice must the insurer provide? A. 15 days. B. 30 days. C. 60 days. D. 75 days. Correct answer. C. 60 days. Explanation. North Carolina requires insurers to provide at least 60 days' notice before non-renewing a homeowner's insurance policy for reasons other than non-payment. This regulation allows policyholders ample time to seek alternative coverage if necessary. Question 71. In a homeowner's insurance policy, which of the following would not typically be covered under coverage? B. Other structures. A. Detached garage. B. Fence surrounding the property. C. Swimming pool. D. Property rented to others as a residence. Correct answer. D. Property rented to others as a residence. Explanation. Coverage B provides coverage for structures on the residence premises that are separate from the main dwelling, such as detached garages and fences. However, structures used for rental purposes may be excluded unless a separate endorsement is added. Question 72. Which of the following best describes the coinsurance clause in a commercial property insurance policy? A. It requires the insured to pay a percentage of all losses. B. It mandates a minimum level of coverage relative to the property's value to avoid penalties on partial losses. C. It guarantees full payment on all losses regardless of the policy limits. D. It applies only to personal property coverage. Correct answer. B. It mandates a minimum level of coverage relative to the property's value to avoid penalties on partial losses. Explanation. The coinsurance clause requires the insured to maintain a specified percentage of insurance relative to the property's value, typically 80% or more. If this requirement is not met, the insured may face a penalty on partial losses. Question 73. Workers' compensation insurance generally provides coverage for all of the following except A. Medical expenses due to work-related injuries. B. Lost wages due to work-related disabilities. C. Punitive damages awarded to the employee. D. Rehabilitation costs. Correct answer. C. Punitive damages awarded to the employee. Explanation. Workers' compensation insurance covers medical expenses, lost wages, and rehabilitation for work-related injuries. It does not cover punitive damages, which are intended to punish the employer for negligence. Question 74. Which automobile insurance coverage would typically cover damage to the insured's vehicle from a tree falling on it during a storm? A. Collision coverage. B. Comprehensive coverage. C. Liability coverage. D. Medical payments coverage. Correct answer. B. Comprehensive coverage. Explanation. Comprehensive coverage covers damage to the insured's vehicle from non-collision events such as theft, vandalism, and natural disasters, including falling objects like trees. Question 75. What is the purpose of loss of use coverage in a homeowner's insurance policy? A. To cover personal property damage during a loss. B. To cover additional living expenses if the home becomes uninhabitable due to a covered loss. C. To pay for repairs to the structure of the home. D. To cover liability claims against the homeowner. Correct answer. B. To cover additional living expenses if the home becomes uninhabitable due to a covered loss. Explanation. Loss of use coverage provides reimbursement for additional living expenses incurred by the insured if their home becomes uninhabitable due to a covered peril, such as temporary housing costs. Question 76. Which of the following perils is typically excluded under a standard homeowner's insurance policy? A. Fire. B. Hail. C. Flood. D. Vandalism. Correct answer. C. Flood. Explanation. Flooding is typically excluded from standard homeowners policies and requires separate flood insurance, usually obtained through the National Flood Insurance Program, NFIP, or private insurers. Question 77. In a commercial general liability CGL policy, personal and advertising injury liability typically includes coverage for which of the following? A. Physical damage to property. B. False arrest or detention. C. Employee injuries at the workplace. D. Product damage. Correct answer. B. False arrest or detention. Explanation. Personal and advertising injury liability in a CGL policy covers non-physical injuries to others such as defamation, false arrest, and wrongful eviction rather than physical property damage or bodily injury. Question 78. An insurance binder provides which of the following? A. A temporary agreement providing coverage until a permanent policy is issued. B. A summary of all policy exclusions. C. Proof of a claim being filed. D. Evidence of policy cancellation. Correct answer. A. A temporary agreement providing coverage until a permanent policy is issued. Explanation. An insurance binder is a temporary document issued by the insurer to provide immediate coverage until a formal policy can be issued. It includes the main terms of the policy. Question 79. Under a claims-made liability policy, which factor is critical for determining coverage eligibility? A. The date the insured first obtained the policy. B. The policy's expiration date. C. The date the claim is reported and filed. D. The total premiums paid. Correct answer. C. The date the claim is reported and filed. Explanation. In a claims-made liability policy, coverage is provided only if the claim is made during the policy period, regardless of when the incident occurred, making the reporting date crucial. Question 80. Which of the following would typically be covered under business income coverage in a commercial property policy? A. Expenses for inventory replacement. B. Costs associated with temporary relocation. C. Loss of rental income due to a covered peril. D. Fines for business interruption. Correct answer. C. Loss of rental income due to covered peril. Explanation. Business income coverage covers income loss due to a business interruption caused by a covered peril, such as rental income lost if a property is damaged and uninhabitable. Question 81. which of the following is a standard requirement for property insurance policies in North Carolina regarding hurricane deductibles? A. Hurricane deductibles must be a flat dollar amount. B. Hurricane deductibles can only be applied if a hurricane warning is issued. C. Hurricane deductibles are expressed as a percentage of the insured value. D. Hurricane deductibles cannot exceed $1,000. Correct answer. C. Hurricane deductibles are expressed as a percentage of the insured value. Explanation. In North Carolina, hurricane deductibles are typically expressed as a percentage of the insured value of the home. This means that if a policyholder files a claim for hurricane damage, they must pay a percentage of their home's value as a deductible. Question 82. Under North Carolina law, how long does an insured have to file a lawsuit against an insurer for a denied property damage claim? A. 6 months. B. 1 year. C. 2 years. D. 3 years. Correct answer. B. 1 year. Explanation. North Carolina law stipulates that an insured must file a lawsuit against their insurer within 1 year from the date of the loss if they intend to contest a denied property damage claim. This statute of limitations ensures that claims are addressed in a timely manner. Question 83. What is the primary function of the North Carolina Rate Bureau RBA? To set minimum insurance premiums for all policy types. B. To establish and recommend rates for certain lines of insurance. C. To represent policyholders in disputes. D. To handle all insurance claims filed in the state. Correct answer. B. To establish and recommend rates for certain lines of insurance. Explanation. The North Carolina Rate Bureau SRB is responsible for establishing and recommending rates for certain insurance lines such as property, auto, and workers' compensation insurance. This helps ensure that rates are adequate and equitable within the state. Question 84. In North Carolina, which of the following statements regarding uninsured motorist coverage is correct? A. It is optional for all auto policies. B. It only covers bodily injury, not property damage. C. It is mandatory for all auto insurance policies. D. It must be purchased separately and cannot be combined with other coverages. Correct answer. C. It is mandatory for all auto insurance policies. Explanation. North Carolina requires that all auto insurance policies include uninsured motorist coverage. This ensures that drivers are protected in the event they are involved in an accident with an uninsured driver. Question 85. What is the minimum liability coverage required for auto insurance in North Carolina? A. $15,000, $30,000, $5,000. B. $25,000, $50,000, $25,000. C. $30,000, $60,000, $15,000. D. $50,000, $100,000, $25,000. Correct answer. B. $25,000, $50,000, $25,000. Explanation. North Carolina mandates that all drivers carry minimum liability coverage of $25,000 for bodily injury per person, $50,000 for total bodily injury per accident, and $25,000 for property damage. This requirement is in place to protect drivers and third parties in the event of an accident. Question 86. How many days advance notice must an insurer in North Carolina provide before canceling a property insurance policy due to non-payment of premium? A. 5 days. B. 10 days. C. 15 days. D. 30 days. Correct answer. B. 10 days. Explanation. North Carolina law requires insurers to provide at least 10 days advance notice before canceling a property insurance policy due to non-payment of premium. This ensures that policyholders have an opportunity to pay the outstanding premium and maintain coverage. Question 87. Which of the following perils is NOT typically covered under a standard North Carolina homeowners insurance policy? A. Fire. B. Theft. C. Earthquake. D. Windstorm. Correct answer. C. Earthquake. Explanation. Standard homeowners insurance policies in North Carolina do not typically cover earthquake damage. Coverage for earthquakes must be purchased as an additional endorsement or a separate policy. The other perils, A, B, D, are generally covered under a standard policy. Question 88. What is required of an insurance company in North Carolina when they decline to renew a homeowner's insurance policy? They must give a 20-day notice. B, they must provide a specific reason for non-renewal. C, they must automatically offer an alternative policy. D, they are not required to notify the insured. Correct answer. B, they must provide a specific reason for non-renewal. Explanation. In North Carolina, if an insurer decides not to renew a homeowner's insurance policy, they must provide the policyholder with a specific reason for the non-renewal along with adequate notice. This allows the insured to understand the rationale and seek coverage elsewhere if needed. Question 89. In North Carolina, what is the waiting period for a flood insurance policy to take effect after purchase? A, immediate coverage. B, 10 days. C, 15 days. D, 30 days. Correct answer. D, 30 days. Explanation. Flood insurance policies typically have a 30-day waiting period before coverage takes effect. This is a standard practice across the U.S., including North Carolina, to prevent the purchase of coverage only when a flood is imminent. Question 90. What type of endorsement is often added to a North Carolina homeowner's insurance policy to provide coverage for damage from sewer or drain backups? A, earthquake endorsement. B, scheduled personal property endorsement. C, water backup endorsement. D, inflation guard endorsement. Correct answer. C, water backup endorsement. Explanation. A water backup endorsement is an optional addition to a homeowner's insurance policy that provides coverage for damage resulting from backups of sewers or drains. Standard policies do not typically cover this type of damage without an endorsement.